Video.
All right, so welcome to the new weekly outlook, everybody. So as always, we're going to go through the fundamentals first and then move on to the technical side with Stefanos.
What is up, everyone? Hope everyone had a great weekend. Let's get into the charts. As always, let's break them down, give you guys a good idea of what's coming forward, and looking forward to trading with you guys on Thursday for the GBP interest rate hike.
Absolutely. So it is definitely a fun start to the week already from a technical perspective. We've got some couple of good moves and everything that have happened so far. So let's go ahead and go over this one article is really what I want to go over. It tells you about the central banks and what are we looking at. So for the most part, a lot of the central banks have already been increasing interest rates. There's only been, a handful, and specifically we're looking at JPY. So if you're trading GBP, JPY, Euro, JPY, you probably have seen a lot of weakness in the yen, and we have broken that down already too, right? Where they're maintaining their accommodative monetary policies, they're maintaining their low interest rates, the negative interest rates. They still have inflation that's starting, still increasing, and all of that happening. So, but they're still maintaining those accommodative policies. So very opposite of what everybody else has been doing so far. When you look at the Fed, when you're looking at other even Asian central banks, when you're looking at Indonesia, Philippines, South Korea, Singapore, like all of them, obviously. But in general, all of them have been increasing interest rates, and it's really been Japan that has been maintaining their negative interest rates. And then also when you look outside of Asia, so when you're looking at the US, when you're looking at the UK, when you're looking at Euro has finally started increasing their interest rates as well. So this is a pretty interesting week in general because we do have data coming out from three central banks. So you have the US interest rates and Bank of Japan's interest rates coming out the same day. And then the following London session, you have GBP's interest rates coming out. So far, it seems like the sentiment is that they're going to continue to increase their interest rates by at least 75 basis points, the UK and also the US. And other central banks, they're following suit. They're doing the same exact thing, 75 basis point hike. So now the interesting thing when it comes down to the dollar specifically is that there have been discussions looking at the last week's data that came out, CPI. We were expecting that to decrease. We were expecting inflation in general to start decreasing, but we started to see an increase instead. So there was a discussion of, can we potentially see a full percentage, so 100 basis point hike increase in interest rates? There's that discussion, but also with that comes this fear or uncertainty, I would say, not even a fear, but uncertainty of, can that be the catalyst that would take the US economy into a recession, into a further recession going into next year? And the reason for that is because Powell did say in his Jackson Hole conference that they're going to continue to increase interest rates, and that businesses and households and consumers in general would be, a little bit, they would be facing some difficulties in general when it comes down to the money supply and everything like that because of the high interest rates. But in order to combat inflation, which is their primary focus at the moment, they're going to maintain those high interest rates going into next year. So here, as you can see, the Fed is set to lift its key rate by 75 basis points for a third time in a row, with even some discussion, like I said, for a full percentage point after the U.S. inflation again topped 8% in August. Whereas Bank of England is predicted to boost their interest rates by 50 basis point hikes instead of 75 basis point hikes. And then, like we said, a lot of other central banks are pretty much doing the same thing: Indonesia, Norway, Philippines, Sweden, South Korea, Switzerland, and a lot of other central banks in general. So right now, what we have been doing since last week, when you're looking at gold, when you're looking at US 30, when you're looking at any US pairs in general, is that ever since CPI came out, and then we started to see PPI coming out, we saw retail sales coming out, we saw consumer sentiment coming out. So all of last week, as the data was coming out, we were starting to already price in into the markets the interest rate hike. We know it's going to be a 75 basis point hike. The market's already priced that in. And at some degree, it's also pricing in, can there be, a full percentage hike? And so that's why you see those nice movements. And then, as fundamentals are released, economic data is released, and then the market kind of goes into, or the market sessions start going into like, an hour after market open, and you're kind of in the middle of the market session, you start to see this consolidation. a lot of the pairs in general are consolidating because there is uncertainty again. With the 75 basis point hike, they're going to still maintain it at the high interest rates. With a full percentage, they're still going to maintain it at the high interest rates. Regardless, they're still going to maintain their high interest rates in general. So Powell again said that there will, the high interest rates will bring some pain to households and businesses, and they're going to maintain that until next year. So with that being said, very first thing is I want to do a quick review of last week, what we saw. We saw CPI coming out. So, like we just discussed, we were expecting a decrease, but instead we got an increase in CPI. So we got an increase in inflation. When you're looking at core CPI, so this is minus food and energy, which have been the outliers for almost the last 2 years, that doubled. So inflation and everything else minus food and energy has doubled, right? And so that's where that sentiment of a full percentage hike comes in. And then as you continue down, we start to see CPI here decreasing a little bit compared to the previous and the forecast for the UK. So that's why it kind of makes sense to do, a half basis point hike or even a 75 basis point hike instead of a full percentage, unlike the US, right? When we come down to the PPI, so producers inflation, then you start to see that, we are starting to decrease here a little bit, which is pretty much a good thing. You continue down, core retail sales have also dropped. So we were sitting at a 0%. Again, 0% just means that we're at the same exact level as the previous month. So 0.4, nothing really has changed. And then we start to see a decrease in that. And obviously that tells you something about the consumers. Consumers are becoming a little bit more conservative. You come down into the consumer sentiment. So we didn't hit or, go anything above the forecast, but we're sitting pretty much in this little range between the previous versus the forecast. So again, not too much reaction in the markets when this data did come out. So that's a quick recap. And then going into this week, started off quite easy. You got the bank holiday from Japan, and then we also had a bank holiday today in London session from the UK. Not much coming out in the New York session anyways. And then you have the monetary policy meeting minutes coming out today in Asian session. You continue down tomorrow, same thing. Not a lot coming out in London session or even in US session, like no high impact or too much of a medium impact unless you're trading the Canadian dollar. Then you have CPI coming out, and again, this is going to prepare you for potential interest rate news if you're trading the Canadian dollar or even US oil, USD CAD, anything like that. Then that's what you're going to be paying attention to. But if you're trading US 30 gold or GBP, JPY, so far we don't have anything coming out until Wednesday when we finally have interest rates coming out. And we are already expecting a 75 basis point hike, but if we do end up getting a full percentage, then I do expect, massive reactions in the market, a lot of volatility, just candles breaking highs and lows with massive wick rejections. The same day, in the evening in Asian session, you have Bank of Japan's policy rate, so interest rates coming out, and they're maintaining their negative interest rates. So that's already been, kind of priced into the markets. We know that they're going to maintain their accommodative policy. So when JPY comes out with their interest rates, I'm not really expecting much of a reaction unless, they come out with a positive interest rates or they start to increase their interest rates. That would be something that is not expected in the market. So that's when I would expect really some more reaction.
Highly unlikely.
Highly unlikely, yeah. They said they're not going to do that and they're going to maintain their accommodative policy. So again, pretty predictable, and that's why I'm not really expecting much of a movement in the market because of that. Going into London session the next day, you got interest rates coming out from Switzerland. So here, again, they're expecting an increase. They were sitting at negative interest rates, but they're expecting an increase now. So tightening up their monetary policies, trying to contract their money supply and everything like that. And then after that, you have interest rates coming out from the UK. So same thing here. We're expecting, a half percentage hike here as well. If they come out to a 75 basis point hike, then I would expect the market to react, right? Or, a full percentage, but it doesn't really make sense for the UK to do a full percentage just yet. And then in Asian session, you have a Japan's bank holiday again. And so after that, I do expect things to calm down a little bit for the rest of New York session and even Asian session. And then going into Friday, it's going to be a pretty fun day. In general, as you can see, there's going to be a lot of PMI services and manufacturing PMI data coming out from the Euro, from the UK, and also from the US. and Powell speaking at the end to pretty much end off the week. So there is going to be a fun week, but you want to make sure that leading up to the actual interest rates coming out, you're purely trading technical. So this is where you have to be very careful and make sure that you're looking for your proper confirmations instead of just like, impulsive moves here and there or anything like that. And then when interest rates come out, make sure if you're already in trades, make sure you're already managing your trades, taking some partials, moving to risk free, because I do expect some volatility there.
Yep. Yeah,
Over
it's the
to
beginning of
you.
the week. You want to be patient.
Absolutely.
All right. Let's go on to GJ and start breaking this down, starting with the monthly. Looking at the monthly right now, this candle has pretty much retraced a good amount. I know we ended up rejecting 166 as I have marked off here, a nice historical level, served as a resistance as well. This candle is still a very strong monthly candle, right? And we're still basically in the beginning towards the back half of September. So how can this candle close? I think it'll close a lot more bullish because pretty sure they're going to be increasing rates, and you see us kind of holding a nice support around 163 right now, and continuing up a little bit. But we'll see what ends up happening with this monthly. But if you look at the weekly right now, you got that third rejection, much more than three, but you have three main rejections of 166. Actually, I would say four right over here as well, where it tapped the last time, came all the way back down to 160, holding this support. And then we pushed all the way back up to that 168 area up here, but then closed below that 166 level. All right. So the previous monthly candle closed a very strong bearish candle with a top wick. It closed a strong body, but at times what I've seen is when you're in an uptrend, you've been creating these higher lows and higher highs. When you're in an uptrend like this and you get some kind of a support formed over here, a lot of times this wick gets filled. We'll see what ends up happening. I did notice another little sign like a bullish big belt over here on the lower time frames. I'll show you that in a second, but that could give you confidence that price could be holding support somewhere around here and possibly continuing up. So if you look at the daily right now, daily is where you had that previous bearish trend that we've been following here, printing the lower highs, right? And then we ended up rejecting 166 multiple times over here. We're now coming into that area. Not that this is as important as a possible previous resistance over here to the left, right? That's a previous strong zone over here that we could be meeting up with. But the fact that you do have this previous bearish trend that we now broke, created a high, came right back down and retest the previous resistance here and support, this could be a very key level for price to bounce off of and continue up. Now, if you guys have ever read Naked Forex, highly recommend reading it. You'll see these candlestick formations, not necessarily patterns as far as like head and shoulders, double tops, double bottoms, stuff like that, but actual candlesticks and signs that they show. You'll see that this right here is called a bullish big belt, where this candle opened up around like 20 pips below the close of this previous candle right over here. And what that tells you on a higher time frame is that price should be continuing up in the direction of that candle right there, depending on how strong this candle closes, right? So you actually have a nice sign of it right over here, where this candle ended up opening a lot lower than the previous close of that bearish candle. And look what happened to price. Now, the fact that we have the fundamentals to our side of increasing rates, could this continue back up? Possibly. All right. We never know. We're just going to trade what we see and not what we think. So we'll see what we can end up getting as far as that. But you do have a fairly clean move over here on the daily so far. You got some clean moves over here, right? That we could possibly be continuing up and holding that support over here to continue bullish.
Absolutely. And before you drop down to any lower time frames, real quick, if you hop back up to the monthly as well,
Okay.
then it's something that you have pointed out in previous outlooks and everything, and I think you like already have the line marked off, but we are breaking out of this massive bearish pressure from like the higher time frame. So if you zoom out even more, just to show like the candles and everything, yeah, there you go. So we're finally breaking out of this bearish structure right here. and you still have, price essentially what it's doing is kind of retesting into these areas. It's
Mhm.
a very key level, and that's why you have a lot of consolidation going on. That's why you have to have a lot of patience. But when you're looking at these two economies, really the only strength that you're getting for GBP, JPY is because of the weakness in the yen, because a lot of investors are moving out of the yen and they're looking into other Asian emerging currencies. So for that reason, you're starting to see this little bit of consolidation happening because the pound is also, weak in its sense that you still got inflation. The Bank of England is still increasing their interest rates, still talking about increasing interest rates, and there's just so much happening from like a fundamental perspective, macro fundamental perspective with the pound. But we're still maintaining this bullish structure after tapping into a lot of these lows. But whenever you're looking at your analysis, whether, you leave it on for a couple of days or whatever it is, which we highly suggest against, but, you want to make sure that higher time frame levels are going to be extremely strong. So you're not looking for trades as soon as price breaks out of these levels. You want to wait for your confirmations, especially if price is consolidating here on the monthly time frames here, then you know that there's going to be a ton of volume. And you have examples, these two examples right here of the volume that follows. So just kind of be patient with your trades, basically.
Yeah, that's a great point. And then also like if to your credit, if you guys look at like a pair like GU, we're almost at $1.10, right?
Mhm.
And GU, it's only bearish because you got a very strong US dollar and a very weak Japanese or Great Britain pound.
Yeah.
So that being said, like you're approaching a level that you haven't been at in around 30 years. So that just shows you that the only reason why this pair right now is bullish is because of that weak Japanese yen. And I also like how we're kind of clearing out of this area too,
Yeah.
right? We're holding that as a support. And above that, what do you have? You got clean moves over here. You got some clean moves over here. Obviously, we're consolidating in this area, but once you clear 168 over here, right? We got some clean moves coming up and continuing up, possibly into this area, maybe even this area right over here that you may want to be aware of, which you can actually drag that across to the left. Um, so we'll see what we end up getting. But right now we're still in the middle of this range right here, and we need to break out of that for any kind of long-term bullish play. Back to the 4 hour, I think we're on.
Yeah.
All right, 4 hours. So again, you have this whole area you can always mark off like that because you got multiple rejections to the downside where price just keeps rejecting and continuing down from here, right? And then now we're sitting in that area. But what I want to do is I just want to mark off our most recent support and our most recent resistance, which we actually just kind of cleared right over here. This is where we were sitting this morning, right? And we were kind of sitting right in the middle of that area. Now we're above the area with clean moves to the left over here. All right. So can we continue up? You got a very clean 4 hour candle right now currently. Where can we go from here? You have this previous support. We just got to see what ends up happening in that area. But this is that more recent. I'd actually rather put this right here because you got that previous support. You got that wick rejecting that area as well. And then you got the resistance. Of course, we can end up rejecting 164 here, but I think we should be continuing out mirroring this whole candle right back up to that area. But we'll see if we're going to get a pullback first before continuing up. But if you look at the 1 hour, not much to change. You have our support right down here. And then you got the previous resistance, which turned support right in this area, and we've been continuing up. So this candle right here on the 1 hour looks like it's starting to flip bearish. We're getting close to market close, so you guys got some time before we get some volume during Asian. Maybe we get that pullback during Asian before continuing back up over here. Let's see if we have any valid trends here too. Because past couple of weeks, we've been rejecting this level up here around 167. And ever since we rejected it for the last time over here, I believe this was CPI, right?
Yeah.
I'm pretty like 90% positive that was CPI. We've been printing lower highs since, right? So are we coming into this level and are we going to reject that level? Right now, I just want to see price hold support in these areas. As you can see right now, see if this is still a valid trend. I'd put it like that, and then I'd make it like that, I would say. as you can see, we're starting to break the previous support that we just held with that bullish candle. Why my computer spazzing out? But are we going to get some kind of a pullback? What I'd be looking for is some kind of a strong support to be formed anywhere in this area right here. Right? We could be coming into this area right here. Let's see if we hold that as a support. But we can also break that and continue back into here and get a liquidity grab, or we can even close back below this area and continue down. We'll see, but I doubt it. I think we're going to be pricing in interest rate hikes. You have a high that was now created up here. So if you do pull back into any of these areas down here, you could very well hold the support and retest the high right back up into that area, which you got about 22 to 25 pips coming in to retest the high. All right, so just be patient, wait for your setups, be smart as well, and trade accordingly. Trade smart. Looking at gold, do you have anything to add for GJ Sharma?
No, that's about it. But what I do want to see, like you said, is like a retest happening. But I would prefer that to happen like on the 4 hour time frame, and the hourly time frame. I'm not entertaining anything on the 30 minute or lower time frames, unless I see a retest here happening on the 4 hour.
Okay, I like it. Makes sense. All right, so moving on to gold now. What you have is a break of 1680, as we've been eyeing for years now. Price is now below that area. It looks like we're getting some kind of a bottom wick formed and a little retracement back up to that level to possibly continue down and fill that wick. But before we get there, at least on the monthly, where's our next level that we could be approaching on the monthly if we do stay below 1680? I would say it's right here. You got the support right in this area with a clean move to the left that we could very well mirror with some more interest rate hikes, and price continues right down on gold. So right now we've been extremely bearish since the invasion of Ukraine and the Fed announcing that they were extremely hawkish and they want to start increasing rates. We've been very bearish here on gold with a very strong US dollar. We got some retracement today over here on the dollar, but nonetheless, we've been printing higher lows. All that really matters is the 4 hour, the daily. Been printing higher lows and higher highs. Not much correction. All the correction's been is mainly consolidation before continuing up. Little pullbacks here and there, but we've just been consolidating and then continuing up here. So that just shows you why gold has been extremely bearish here. US dollar is the strongest currency in the world right now. Business currency, the fact that they're increasing rates, sentiment, everything. US dollar is the strongest. So that's going to push a commodity like gold dollar down. All right, looking at the weekly now. Last week, we got that strong close below, right? Now it looks like we're coming up to retest this area. Can we stay below 1680? All right, are we going to stay below there? Are we going to get some further pullback into these areas like maybe 1700? Mark that off for you.
Another thing to consider here as well is that for the monthly time frame, it's just been a huge bearish trend. So it's very important to wait for, like, as these lower lows are being formed, to wait for those retracements.
Absolutely. Yeah, again, lower highs, lower lows, continuing down over here. Strong bearish candle close with a wick to fill. Hasn't filled the wick yet either. And again, now we have this area over here that you got to be aware of. I would just kind of move it right down there because you got that previous support and then that resistance. But I'll also put something right here that we previously created as a support where price bounced off that level, past the eye of that candle, and we ended up reaching all-time highs after that move right there. Yeah. Looking at the daily, where are we? Okay, so daily, now what we could do is readjust that. You can always keep some levels down here as well, but we got a clean move coming down into this support over here. So that's the next area that I want to see gold tap into if we end up passing the wick over here, that monthly wick that we created, the weekly wick right down here. Can we end up holding that resistance and continuing down? But again, like Sharma said, we can always get that pullback back into that 1700 range.
And all of this is just market sentiment trading, or just leading up to the actual interest rates that are coming out. Because from an economic perspective, you don't have anything else coming out. right, for the US dollar or anything like that
Mhm.
until Wednesday when the interest rates come out. So here, really, the uncertainty is we know there's going to be a 75 basis point hike, which is a good thing because you need to be able to control that inflation. If you don't control inflation, we have a lot of examples when you look at other economies, especially in South America, what happens if you don't control inflation, right? So that 75 basis point hike is the healthy hike. I think with that, we can't continue the confidence of investors in the US dollar, but I think if we go that 1% a hike, and then after that, if there are still plans to increase interest rates, then I think it can bring a bit more uncertainty, and maybe that will be the catalyst to bounce gold back. I can even see like you said, a retracement back into 1700, potentially back into these areas, maybe
Yeah.
grab some more liquidity, test structure, and then continue its move down.
Yeah, we could pull back anywhere into these areas. We can, I mean, I doubt it, but we could very well come up into here as well, right? And that's that seller zone where price comes right back into it and then continues back down, respecting that resistance and just tapping this area one more time. But I don't know if we're going to come back that far. That's a lot, right? Unless it's
That's
just
just
like
a
a
lot of
liquidity grab.
fear. Yeah, that has to be a lot of fear because
That
another thing that I forgot to mention in the fundamental breakdown section was that Biden pretty much making that statement that if China
that's
is going to go and invade Taiwan, then US will be stepping in to pretty much help out Taiwan. So if anything like that escalates where China does make any movements like that, and then US starts becoming involved, then I think those could be the catalyst that could push us back above 1680 for the long term,
hmm
for a couple of months or so. But until
yeah.
then, it's all really just interest rates.
Yep. No, absolutely. That's definitely, I mean, other than interest rates, that's the main thing that would really shock gold and send gold up.
Yeah.
But again, it looks like we're kind of just teetering around right below 1680. As you can see, this support. I grabbed a little buy here on gold this morning, anticipating it to retest the high up here because you get the support that was formed right there. Price ended up, we actually had a resistance that was right over here. Forget all this price action over here. Actually getting a
Mhm.
very deep pullback on GJ right now before the market. Here, I'll go right back to it just because we were just calling it and talking about this. But market just closed, right? And we just pulled all the way back into this area over here. So wait for some kind of a support to maybe form before you take price up. And most importantly, wait for your setup that you're normally used to taking. Looking at gold again, you had that previous resistance. We ended up creating this low over here, and then we ended up closing back above that resistance and then closing below it right over here, causing a consolidation, right? We're now in a range over here. So we ended up creating a higher low here on the 4 hour this morning with a strong bullish candle close around 9 a.m. And then 9 a.m. candle over here created that bottom wick, respected the low. Let me zoom in for you and past the high of the previous candle. That's not where I entered. I entered a little bit on the lower time frames, but this is a nice move to take price back up into this area over here. Right, nice candles, nice clean move to the left over here, and a nice higher low. But looking now at the 1 hour candle, the candles, I would mark this level off right here because that was that main zone where price ended up reacting to that level and then holding support in that level as well. Now we're holding some kind of a higher low right here
Hmm.
and continuing up. So getting rid of this and then kind of just drawing it like this, a little bit neater. You got a clean move coming up into this area. Again, market just closed, so we'll see what the next candles end up doing. And if you even have enough range from here to this resistance for you to take something, you got about 40 pips, which on gold is okay, but I'd rather wait for some kind of a pullback before continuing up. Because right now,
Absolutely.
since creating this low, we just created a higher low over here. So can you expect some kind of a rejection here or even a lower high for a price to then continue back down into this area and then continue back up? Like I could see us ranging below 1680 for a little bit too before interest rates come out on Wednesday.
That's exactly what I'm looking at. If you hop up to the 4 hour and then maybe we'll pretty much be done with the breakdown. What I'm also looking at is specifically right at this level here where these candles keep closing here and then you get a nice sell-off. And that's pretty much what we ended up doing right now too with the current 4 hour candle, where we ended up closing right at this level. So exactly what you said on the lower time frames, it would look like price pushing up and rejecting into this area here. But what I want to see is, can we end up doing like a top wick rejection quite similar
Mm.
to these previous candles? And then maybe the candle flips back down and we end up pushing right back down bearish. If we can get a bearish close like that, I think that is going to give us enough confirmation to mimic a move like this to come back into some of these support areas. I do think that as we get closer to news coming out, or the interest rates coming out, it's already Monday, so you only have like tomorrow, right? And then you have the interest rates coming out. I think we are pricing in the 75-point hike, and for that reason, we can take trades coming right back down into some of these support areas. So for me, like the way that I've narrowed in my price action is kept my support down here, and then look for any potential sell opportunities coming right back down. After that, you got clean traffic coming back down here. So target that, and then let runners go into this area.
Absolutely, I love it. I think it makes sense, guys. Again, just stay smart in these areas. Stay smart on GJ as well. Looks like again a little pullback here with the Sydney Open, but again, just be smart this week. We'll be with you on Thursday. We're looking forward to it. I'm sure you guys are too. But if you guys have any questions at all, please reach out to us. We're more than welcome to help out and see what you're struggling with as a trader or personal life, whatever it may be. But hope you guys enjoyed that.
Absolutely. So our live session on Thursday is going to start at 3:30 a.m. PST, which is 6:30 a.m. Eastern time. So 30 minutes about 30 minutes before interest rates come out from the UK. So we will see you guys back here on YouTube for the live session. Other than that, if you guys have any questions, as always, feel free to reach out to either of us. Fastest response is going to be on Instagram at SharmaFX, or for Stefanos, it's going to be at StefanosFX. And then Friday, we're also going to do a simulation session. So we'll see you guys back here for that too.
Yep. Have a good